Hey everyone, welcome back to Fintech Garden Weekly Harvest Review. I'm Dumitru Condrea.
Hello, and my name is Igor Tomych. I'm CEO at DashDevs, and today we're going to discuss what was important during this week and hear the breakdown of the most important fintech developments shaping the market right now.
Well, we decided today that we'll dedicate totally today's Weekly Harvest episode for UK fintech news. Not because there is something special there, but because a lot of things happened and we need to pay attention to what's happening in UK because it can be an example or it can affect European Union at all.
First news is about Gemini exit and in the cost of the regulatory uncertainty. And I think that's quite hot topic, and we had the discussion before the recording. So Dumitru, what do you think about that?
It's not Gemini Google product. It's totally different product. So this fintech company decided to leave United Kingdom and European Union to stop their operations here and to focus specifically on United States and Singapore. Well, officially, the statement is that consider that the absence of a good regulation, or to be more precisely, because of a long term that takes FCA and other regulatory bodies in the United Kingdom to change and to finalize the regulatory framework for crypto assets, for fiat assets, and so on, it just hit the business and they decided to leave. Well, I think that based on the experience I have with UK regulatory bodies and with European Union one, I'm very surprised about this decision because, to be very honest, in the United Kingdom, regulations are much clean and clear regarding crypto assets and virtual assets than in European Union, where in European Union also a lot of things are very well settled. But in UK, the environment is much more clear and precise. And for me, it sounds more like an excuse why they're cutting the operations here. I think they're just reshaping the process inside. They're cutting maybe overheads, or they just want to focus on specific market. United States market really now is a big interest, and it's much more interesting and much more with greater appetite than, for example, European one or UK one. And I think this is the main decision why they decided to move.
I think UK market is definitely a lucrative one for the companies as Gemini. And fairly, with my experience, even when we say that the regulations are quite clear, sometimes they're quite clear that something is not possible. I personally seen several startups failing in United Kingdom connected to the digital assets because the regulator was not, and regulations was not in their favor, and certain functionality and approaches which are now quite feasible in the United States or even with MiCA in European Union just failed in United Kingdom. So that's a question of chicken and egg, because if you're withdrawing from this market and UK is a huge one and you're cutting down the cost, maybe that's a question that operations doesn't make sense and doesn't add up from the margin perspective. So I would tight those two, because in one way they might say that's due to regulation, but that might be the case that regulations were triggering those cost issues that they're facing. So it's both. And as you rightly said, other companies are staying on the market. So what do you think? What is the reason for that?
Well, we have to point out the fact that currently, and that's true, that United Kingdom currently is in period of transition from classical AML framework to FSMA framework, which is a little bit different. And during transition period, of course, a lot of things are changing and not all the businesses can survive. But I know from my experience and from what we are doing at Novafin that during this transition period, a lot of things are still available from AML, classical ML. And a lot of things that are from old framework or framework that will be soon old one are still active. So you can still continue to work and you have time to prepare yourself. It's true, not all the companies can adapt their business models. I honestly think they just decided to leave the market and they just found a good excuse for this, not to drop down their evaluation or whatever. I saw that a lot of companies, their competitors, who continue to work in UK and Europe, they raised up this topic in different interviews and different publics, in Twitter, saying, hey, this is an example how things are bad and so on. I understand that they just take this example and use it in negotiations with regulators. If those companies are still staying on the market, it shows and proves the fact that still exists capacity and still exist opportunities on UK market. European Union market is less advanced in regulations as United Kingdom's market. It's also in period of transition, of course, but it still have a lot of opportunities. And we saw that after MiCA appeared, a lot of investments appeared in crypto market. And I'm not sure that this is, as I said previously, this is the real reason why they're leaving. So I just honestly think it's just an excuse. Vice versa, It's coming to the second news. Vice versa, buy now, pay later regulation arrives late, but firmly in United Kingdom, relatively late. So right now, United Kingdom has a very well precise and established buy now, pay later frameworks, and it helps companies to be more precise and to have much more clean rules how to work with this product.
That's good news, I think, because it's not like we're in a situation when we're defining the business model. Everyone understands how it works. Every checkout, maybe on Amazon or any e-commerce, they actually providing you the options with the buy now, pay later, splitting into the installments. And I think it's really good to have some kind of guardian rails to understand what is required from those companies. And maybe as one news that is just side news, Klarna is reaching almost 980 millions per quarter revenue. It means that the buy now, pay later as a business model or starting business model for several companies is already proven to be with us. It's better to have something than not having. So later is still good, and it will define certain guardrails for the customers to use this functionality. Buy now, pay later, I think it should be existing in capitalist way, because basically the whole idea for capitalism is properly operating with the financial instruments. We know that we cannot have the monetary base, which is just connected to the labor produced in 1 year. We should have an ability to credit. We should have an ability to project our incomes, and then over those incomes have certain goods for innovations and development. So that's how basically all the startups are working. Because if we think the startup is reverse business model, you're taking the money and then it's possibly in the future it will bring certain revenue. So sometimes maybe it doesn't feel from the customers as a good approach, but still it works as a business and as a model. So I think by having this from FCA will improve the situation on the market and will provide better guard railing. But I'm absolutely glad that it exists and it's going to be active on the market.
We have to point out to our audience that buy now, pay later in United Kingdom, which basically is this product is a consumer's loan. They were acting as a consumer's loan, but they were not regulated by the FCA. It was something like acting as a consumer law, but without regulations as a consumer's law. Currently, so starting from July 2026, in 4 months, buy now, pay later products will fall under full regulatory overview of FCA. They will be considered as not only by product perspective, but also by regulatory and law as a consumer credit, which means that those startups and those companies who are running this product, they'll have to be much more transparent. They'll have to be much more attention to whom they are giving such kind of a loans. It means also that will be some links between fiscal authorities, fiscal products, and fiscal reporting with credit score, national credit score, European one, wherever. And it's, by the way, one of the first examples when in European continent space, when this is British authorities can show to everyone how it can be done properly, which I'm very happy for British consumers. I know that for the companies, it will imply some additional costs. Much more attention on anti-money laundering, on policies, reshaping the policies. Well, I know from what I saw on the market, some of the companies already are prepared regarding the policies for buy now, pay later, because they understand the risks and they want to work with these risks. Possibly some overheads will, by sure some overheads will increase, overheads costs will increase in these companies, but overall it will provide much more stability on the market, because buy now, pay later can currently with the amount, even if Klarna approached 1 billion in this quarter, it's not a very big market as, for example, standard consumer's loan or housing loans. But it can provide in future some issues if it will not be regulated. So very good news. I'm very happy for the fact that this started to be a part of regulations. Even if I'm considering myself a person who love more freedom, economical freedom, from another side, I think that in banking, fintech, and finance, regulations are very important. And if in a specific product zone exist regulations, it means that a lot of money will appear in that zone, because investors will be much more sure that those money that they are investing are going, to bring them good money without creating some chaos and disturbances on the market.
And let's discuss another, a movement, which is political and regulations, is the payment sovereignty and the Visa Mastercard question in European Union and United Kingdom. I think the last year showed that certain dependency on American technologies and companies, which is influencing the UK market, is there. So I think that's a discussion that is happening not just in European Union. And recently we recorded the episode for discussing the future and the current state of the digital euro. So please take a look on our channel. Right now we are seeing that the cash is declining, but there is still a need to be in control over the payment infrastructure, because shutting down the payment infrastructure, which is facilitated from overseas for United Kingdom, is something that we cannot afford. Brings a lot of question. What should be the replacement, or there should be the guardrails, the safe rails, to make sure that the economy is not struggling by having the technology from overseas?
If you'll watch also previous episodes of Weekly Harvest, you'll find out that exists a consortium of European banks, of big European banks, who already started the work on euro-based token. So a lot of movement is happening here regarding the European and UK sovereignty over Visa and Mastercard, over international payment systems. I think, well, we are late. Honestly, European Union, United Kingdom, European continent is late on this topic. Even countries like Russia, China are much ahead on this topic, on sovereignty of payment infrastructure. We am sure that in the moment when it will start, we will be, capable and able to run it very quickly and to be, start to be sovereign. This is very important for us. It seems that in a few years we'll have our own credit debit cards with not Visa and Mastercard or Union Pay logo on that, or American Express. Possibly it will be something like European Express, wherever. We'll have our own tokens, virtual assets tokens linked to euro, and it will provide us much more freedom and independence, and will put us, European continent, to do on the same table with big players. And finally, we will start to control the rules and control the market. I really, really wish success to everyone who is working on these projects, and we honestly need this.
Thank you for listening to us today. It was really good to discuss all those happenings that we see in United Kingdom. So thank you for listening to us today. Please subscribe to our channels. Please review our episodes that we have a special topics for you. And thank you. Have a great weekend and see you the next week.